In the previous video, I have already covered with the meaning of the trading, profit loss and balance sheet. Now let us learn the recapitulation along with the problem solving of the final accounts. Direct or indirect. These are the two different types of expenditures that are required to be clarified before posting any item into trading or profit loss account. Remember, all the direct expenses are posted in the trading account, whereas all the indirect expenses are to go to the profit and loss account. Now let's solve Mr. Kumar's accounts together. Think of it like sorting a big pile of receipts into 3 trays. To begin with, we have the trading account. Now ask yourself, did this rupee get spent before the goods were ready to sell? So here comes opening stock 995, purchases 6200, wages 430, and that sneaky carriage inwards rupees 9 sitting in the credit column. All direct costs all go here on the debit side. On the credit side, we simply put what we sold, like sales 7819 plus what's still sitting unsold. That's your closing stock with 1430. Now subtract one side from the other and profit falls out as 1615. That's your gross profit. This is purely for buying and selling. Nothing else counted yet. Now let's move on to the profit and loss account. Ask the opposite question. Did the cost happen after the goods were ready just to keep the shop running? So all the expenditures like salaries, advertising, postage and telegram, and that discount which is marked with DR. Remember, DR means debit. This is trial balance way of whispering that it is an expense, not an income. Bad debts, interest, they are all to be summed up here together. Take it off the gross profit and you land on the net profit. That's the real take home for the year. Now let's prepare the final statement of your business, which will show what does the business own or owe. This one is not an account, it's just a snapshot. On one side, everything that the business owes, that is capital plus the profit that it just earned, and then the creditors and the loan. On the other side, everything it owns, that is buildings, machinery, fixtures and fittings, debtors, and the closing stock. We already used this in the trading account, right? It shows up again here because it's still an asset sitting in the shop. Now both sides land on the same figure 6812, and that match is the business telling you, yes, I balanced you correctly. Balance sheet balances minus total liabilities is equal to total assets. Don't trust which column a trial balance item sits in. Trust what the item is. Debtors and buildings were oddly listed in the credit column here, but they are assets by nature. So they still land in the balance sheet, not as income. Now here are some key takeaways. Start from the trial balance, then classify by nature and not by name. Closing stock does double duty and the numbers check themselves. Now hit the like button and comment down if this made you confident to solve the next.